Growth in November was slower when compared with October. When you look at manufacturing over the past decade, you can see we had a slight dip down this month, but overall heading out of the worst slump since 1980. For more on what's driving the growth, Norbert Ore is the chairman of the ISM Manufacturing Business Survey Committee, and there he is live. Welcome to you.
Thank you.
Now, do you focus on the fact that the manufacturing number has expanded for a fourth consecutive month here, or that the survey did come in a little lower than forecast?
I think we want to focus on the trend that's fairly well established now. This is the fourth month of growth in overall manufacturing activity. It's the fifth month that we've seen growth in new orders and the sixth month that we've seen growth in production. So I feel confident that the trend is well established, and while the activity level may be down slightly, it's still doing what we expect it to do, and that is continue to grow.
Inventories are still contracting. This is raising some eyebrows here. Why is that happening when manufacturing is expanding? New orders rose, as you pointed out. When will we start to see a rebuild?
The inventories number was down 5 points this month from the prior month, and I think it's still part of the correction. People trying to get their inventory levels right. We've got, in few instances, people reporting problems with a lack of availability of certain products and so on. So I think it's more of a balancing act that's going on.
Yeah, in October, there was an uptick in your employment sub-index, still hiring in factories. Back in November, it fell back some, but it still held above that 50 expansion level. What are we to make of this? What is it telling us about the current state of the U.S. labor market?
I always look at our index as being a better indicator of sentiment within, with regard to employment.
Why do you say that? Well,
the nature of the way we ask questions are that one company could respond that they that their employment is declining, and that may mean 100 jobs, but yet it would be offset by another company that responds yes, and it could be only one job. So it's a better measure of sentiment in my mind that are manufacturers willing to hire if they have the requirement. And I think that's the answer is yes, if they do, they're doing that. We've gotten a number of reports of temporary employees being hired and so on. So when we compare it to the jobs data and so on, it's not going to stack up very well, because that data says we're still declining in jobs. But overall, I think manufacturers are willing if they have the need.
So the prices index fell 10 points, so I guess that would signal no inflationary pressure there. But commodity prices are elevated, so is there a disconnect?
Well, I think we're seeing, again, some of the commodities finding a new level. Copper prices have been going up significantly, obviously gold prices. But, you know, what we're comparing really is the average price that our manufacturers are paying for all of their raw materials. And that says there's a good bit of stability in that pricing right now.
Now, what are your survey respondents saying is of most concern to them?
Well, always our panel is concerned about inflation, and I think with the prices index falling where it is, that's probably of less concern than most other time. There's still a tremendous amount of confusion among manufacturers as to directionally how broad and how deep is this recovery. I think they're taking it one step at a time, so it's don't make any long-term commitments, stay short on everything, and hope that new orders and production hold up.
How will the November ISM register in GDP?
We're looking at somewhere around 3.7%, I believe. You know, and that could be to the low side of that, of around 2.5% to 3% would probably be the right range.
Respondents, from what we understand, also talking automotives. They're saying demand from the manufacturers does remain strong and building. As you know, we're awaiting the latest vehicle sales numbers. What are your thoughts on that going forward?
Part of it is it depends on who they're working for. Some of the automotive companies are doing better than others, and some product lines are doing better. So there's probably some mixed signals in that. You know, bottom line, I think things have held up much better after the Cash for Clunkers program stimulated demand, and things are holding up better than many thought.
Unfortunately, Ford's November sales did come in unchanged, which is a little weaker than the forecasters. That number just hit the tape, Mr. Ore. But, you know, it's interesting. In November, 20 of 18 manufacturing industries reported growth, with the apparel industry coming out on top. Is that surprising, or why did that industry, why is that a leader?
Well, I think with the holiday season and so on, maybe there's more movement there. Frankly, apparel is a difficult industry to measure because it's a relatively small industry today. And so, again, it depends on the product lines that they're in.
Norbert Ore of the Institute for Supply Management joining us from Atlanta. Mr. Ore, thanks.